Welcome back to Not Your Father's Accountant. My name is Igor Tutelman, and I'm a CPA and the managing partner of IOTA Finance. Do you use your car to pick up supplies for your business? Are you meeting with clients or driving out to see your vendors, meeting with business partners over lunch? If so, this guide is for you because odds are you're probably leaving money on the table, or in this case, the dashboard. Today, we're diving into something that almost everyone can relate to, and every entrepreneur: car expenses. And we're going to talk about how you write them off for your taxes, whether you own or lease, use it a little or a lot for work. We're going to break down how you can maximize those vehicle deductions. So here's our agenda for today. What are vehicle expense deductions? Leasing versus owning your car. What expenses can you write off? What trips can you write off? Documentation and mileage logs. And we'll recap all of this at the very end. Plus, I've got a free resource for you guys, a calculator that helps you calculate which way is the best way for you to write off your vehicle. Is that actual expense? Is that standard mileage? Let's get started. First up, let's talk about what we mean by vehicle expense deductions. The IRS is going to allow business owners, freelancers, and even some employees to deduct certain costs of operating a vehicle for business use. This could mean part of your car payment, your gas, repairs, maintenance, but it's not going to be as simple as saying, hey, Mr. IRS, I used my car, tax write-off, tax write-off. No, you're going to have to follow a couple of rules. Does it matter if I lease or own the car when I write it off? And the answer is yes. With a lease, you can generally deduct the business portion of your monthly lease payments, but when you own the car, you can take deductions on depreciation if you use the actual expense method, which we'll go over in a second. It's going to be one of those small differences that's going to add up over time. So you want to pick the option that's going to suit your needs best. And we're going to go into these deduction methods in just a second. How do you calculate your vehicle expense deduction? So there's going to be two main methods here. One is the actual expense method, and two is the standard mileage method. The actual expense method is going to allow you to deduct the actual costs associated with your car. Think fuel, oil changes, repairs, insurance, registrations, and even depreciation for owned vehicles. But keep in mind, if you're deducting a portion for business, you'll need to document the percentage of miles you drive for business versus personal use. For the standard mileage method, instead of itemizing your costs, you're just going to keep track of your miles and multiply your business miles by the IRS's standard mileage rate. This changes every year as it's adjusted for inflation. For 2024, for example, it's going to be 67 cents per mile. It's much simpler, and sometimes it's a little bit less of a deduction than the actual expense method. It's going to depend on your car and how much you use it. My rule of thumb here is older cars have more maintenance and upkeep costs. So the actual expense method usually makes more sense. Newer cars are going to have less maintenance and fewer upkeep costs. So the standard mileage method usually makes more sense. However, keep in mind that if you use the standard mileage method in your first year, you can keep using it or switch over to the actual expense method. If you use the actual expense method, you cannot switch back to the standard mileage method. So you have to choose wisely. And you can use the link in the description for a calculator that'll help you decide which method will save you the most money. So what exactly counts as a vehicle expense? With the actual expense method, this is going to be being able to write off fuels, repairs, maintenance, insurance, registration fees, lease payments, and depreciation if you own the car. The standard mileage method is only going to cover those per mile costs. So if your car is expensive to operate, the actual expense method is going to save you more. And yes, if you have tolls or parking fees, you can write those off under either method. Depreciation can be a massive write-off for business purposes. Odds are, not counting bonus depreciation or Section 179, which we'll cover in a different video, you're going to be able to write off somewhere around 20 to 30K of the vehicle price in 1 year. It's going to depend on several factors. Like I said, we'll cover this in another video on vehicle depreciation and how some business owners are writing off those G-Wagons and Land Rovers. Next, let's talk about what trips in your car can you write off? This is an important question because you can't just write off every trip you take in your car. You have to keep track. Personal errands or commuting from home to your office aren't going to count. But traveling between work sites, meeting clients, and trips to buy supplies or materials for your business, those are deductible. If you're working from home and you're going to meet clients, that mileage might be deductible too. You just have to make sure that it's directly for business. This leads me to talk about documentation. Said it once, I'll say it a million more times. The IRS is specific about this. If you're going to claim vehicle expenses, you need records. You need to keep a mileage log. You need to show the date, mileage, business purpose, and location for each trip. Now, I know that sounds like a lot to keep track of, but there's apps that do just this, whether that's QuickBooks Online or MileIQ. You can keep track of it that way. You can also do the old-fashioned way of just tracking it by pen and paper, which your accountant won't like you for, or by putting together a spreadsheet to keep track of it. Either way, consistency is key here. And make sure you keep receipts for expenses you're claiming if you're using the actual expense method. If the IRS asks for proof, you're going to be glad that you have it. Either way, just keep track of as much as you can. If you keep track of too much, great. If you don't keep track of enough, that's going to be tough to find that information. All right, so to wrap it up, vehicle deductions or expenses can be a big help in lowering your tax bill as an entrepreneur and a small business owner. But you need to play by the IRS's rules. So choose the method that works for you, track your business miles, and keep solid records to take advantage of this deduction. And there you have it, maximizing your business vehicle expense deductions. Remember to use the link in the description to calculate which method saves you the most money on your taxes. If you have any questions, leave a comment or reach out to me at igor@notyourfathersaccountant.com. Thanks for tuning in, and remember, with the right strategy, tax season doesn't have to be a pain. Don't forget to like, subscribe, and hit that bell for more tax tips from Not Your Father's Accountant. I'll see you next time.